Hi guys, this is Ade Juana with Realty Executives Brio here in downtown Bellevue. And today I have Kenton Becker. He is my preferred lender, and we're gonna talk a little bit about home loans. Okay, Kenton, let's tell us a little bit about you.
Okay, so my background, I've been a loan officer since 2003. And pretty much I've only been with two banks the whole time. Recently switched to American Pacific Mortgage. I have a background mainly in first-time home buyers and also special programs for the state, like down payment assistance and kind of educating home buyers on the housing or home buying process.
Awesome. And I have a list of papers so we can ask Kenton. So what give us a little tips about qualifying.
So qualifying, I mean, as far as tips go, we want to focus on income, credit, and debts. Those are probably the top three areas that as a loan officer I look at. With the income, it is what it is, but it is going to affect what you can buy. So it's important to understand that how much you make and how your income comes in will affect how much home you can get into. The area that you can probably influence the most is your credit and your debts. And they kind of go hand in hand. With your debts, the lower your debts are, typically that means more home you can buy, but also the lower your debts are, the better your credit score will become as well.
Right.
So it definitely helps. And those are the tips I would give to a new home buyer that's looking to purchase maybe this year or the next coming months.
Okay, awesome. The next one is tell us a little bit more about home loans.
Well, there's different
Like loan types.
Yeah, there's different types of home loans. There's conventional, there's FHA, there's VA, USDA, jumbo loans, and they all kind of serve their different purpose. There's no one loan that is the best to rule or fits everybody.
Right.
They have different needs. So if you're a veteran, the VA loan is the best option for you. If you're buying in a rural area, the USDA rural is the best option for you. If you have higher credit scores, then a conventional loan might be the best option. If you have lower credit scores, FHA could be a better option. But they all have their pros and cons. And I won't get into all of it here. This is something we do discuss in the home buyer education classes that we do as well, getting into the pros and cons and talking a little bit about why you should choose one or over the other depending on your situation.
Mm-hmm. You're talking about the class. When is the class?
So we have different classes that take place, different locations, different days. We do a class here in Bellevue each Tuesday night, and then we have classes down south in the Puyallup area. We have classes even down near the military bases in DuPont.
Mm-hmm.
We even have classes over in Moses Lake. So we're kind of all over the place depending on the location that works best. But we've got longer, more in-depth classes that are like 5 hours long, and then shorter, 2-hour classes that are, we even provide food. So we kind of make it however you like.
Right. So if you can make it to the class, it'll be awesome because you will learn a lot more about home loans. And then I have the next question. What is it? What is in a loan payment? What is that?
So a loan payment is made up of what we call PITI, and it stands for principal, interest, taxes, and insurance. So your principal and interest is what makes up your monthly payment back to the bank. So when you have a certain loan, let's say $300,000 at 4% interest, and you're paying that back over 30 years, that payment is going to be your principal and interest payment, paying back the loan and also paying back interest. And that payment won't change for the next 30 years as long as you choose a fixed interest rate. So that's that portion of the payment. Then you also have your taxes, which a day can show you what the taxes are at any home you're looking at, the annual taxes. We can figure that out.
Right.
And then you have insurance. Now, insurance can be two parts. It can be one part, which is home insurance, and that's the insurance. That's the good insurance, the insurance you want on your home to protect you. Then you could have what's called mortgage insurance, and that's kind of the bad insurance. That's the insurance you want to get rid of as fast as possible because it's only there to protect the bank. If you're putting a lower amount down, you have mortgage insurance. Eventually that mortgage insurance with some programs can go away.
Right.
So it's not, a lot of times, not part of your total monthly payment over the next 30 years. But it is something that's part of the monthly payment that you're paying.
Okay, that's awesome. That's a lot of information. And then for first-time home buyer, do I need excellent credit?
Not necessarily. Washington State has down payment assistance programs down to a 620 credit score.
Oh, wow.
And as a first-time home buyer, if you're not needing down payment assistance, you can even go down to a 580 credit score. So it's only if you need down payment assistance does your credit score need to be a little bit higher. Otherwise, you don't have to have perfect credit to purchase a home.
Right. And what is down payment assistance? I heard it's a free money that government gives to everybody. So
yeah, down payment assistance is money that you have to pay back, but it is free in that you're not paying any payments on it and there's no interest on it. So the government, Washington State, basically gives you money to cover your down payment, and you just pay back whatever they gave you, even if it's 30 years from now. But there's a certain percentage that they give you, and it is enough to cover all of your down payment, and even a little bit of your closing costs. So it's a really great program.
So that's really awesome.
Yeah.
Awesome program. Yeah. And then how can we reach you? Like, just say, I'm comparing Kenton with online lender. How that difference, like, hey, the online sounds good. Like, why I want to pick a local lender if I can get online lender?
Well, there's the biggest differences are going to be with a local lender versus an online lender is accountability. You know that it's somebody that you can get a hold of, you can reach them, you can go to their office, you can talk with them. And it's more than just somebody that's communicating over phone or 1-800 number or email. There's somebody that you can actually sit down with and get your questions answered. And a lot of times it's an issue of even something as scary as what's called predatory lending. Most of the stories that we hear about with predatory lending, where a loan officer takes advantage of the client, is with out-of-state internet-based lenders. And so you have to be careful with that, and that's why we always recommend to go with that local person.
Lender.
But yeah, that a lot of times it also comes down to comparing options. If you have an out-of-state lender or an internet-based lender, we can compare some estimates, we can compare numbers and see what makes the most sense.
Right. And then with local lender, if I call you, are you gonna give me to a robot or 1-800 number?
No, I give everybody my cell phone number. So you can text me, you can call me, email me, and then, through a day we have a mobile app that we use to stay communicating through the process as well. And it kind of updates people along the way. So we do utilize a lot of the technology that these internet lenders and out-of-state lenders have. But we do it with a local approach because I'm a local guy.
Because we're local.
Yeah.
The time zone is really a big deal too. Because time difference, it can make a deal or break a deal. So that one is really important too. And Kenton is really my preferred lender. Most of my clients that I refer to him goes to him just because if they need something and they need a person, they can always come to the office and meet with Kenton himself, not a robot or 1-800 number. Okay. Oh, one last thing. They always say, hey, can I just wait until the rate got lower? Which personally, I think the rate right now is really great. And if you think the rate is gonna drop, do you think that's gonna happen?
It's hard to say. Nobody has a crystal ball on what it's like saying, do we think the stock market's going to go up or down, or what do we think it'll be 6 months from now? We don't really know. But a lot of indicators show that we're kind of at historic lows right now already. So it's hard to imagine it continuing to get lower. At some point, there's not going to be a bottom. You're going to be as low as it can go. So we look more at, are we as low as we can go to where it might actually go up in the future? And that's kind of where I think we might be at. We might be seeing those lows. In my time as a loan officer since 2003, I've rarely seen interest rates where they are right now. Usually we see rates creep back up into the 4s and the 5s, and that's kind of where they tend to hover. But right now we're on a lot of cases in the 3s on an interest rate.
Right.
So I suggest everybody to, hey, let's take advantage of that and move forward now while they're low.
I think that's it for today. We're over the time, and maybe we can continue next time. Okay, thank you guys. I put all the info down below. You can reach out to him, you can reach out to me, and if you wanna have him tailor, what you call it, tailor the
Like a custom estimate.
custom estimate,
You can provide your information to me. We can run some scenarios, some estimates that breaks down prices on different properties, prices on comparing different types of loans. So we can show a lot of cool stuff you can compare to figure out what makes sense.
Right. Okay, thank you, Kenton. Thank you for watching, guys. I put all the links down below. If you like the video, please hit like and subscribe. Kenton also have a YouTube channel. I put them down below too. And I'll see you next Thursday. Thank you.